Hi, it's Wayne from truthaboutmortgagerates.com and here for your rate update on Thursday, July 31st. Well, today we saw another positive move in the bond market after our last rate update on the 24th. Just a week ago now, we saw rates improve last Thursday, then got hammered on Friday, and we worked this past week basically to get us back to that same point. Today we finally improved past that point, but we struggled all week to get back to just what we had last Thursday. Now, over the past week, we've had stocks move higher, and now today they'll move lower. Even in the face of money flow into stocks, we did fairly well this week in the bond market, but every time that stocks have really gone down and money's flown out of stocks, it has definitely helped the bond market this week to help us again get back to the level we were at last Thursday and now actually move above that. We've improved past it, moved past the 25-day moving average of bond prices, which is a significant mark that we need to move past. We have another layer of resistance above us with the 50-day moving average, and if we can move past that over the next few days, then we're going to see another greater area of improvement to move all the way up to the 200-day moving average. Again, as bond prices moving higher, rates moving lower. For more information on, again, what all of that means and how it plays in, check out our report, Truth About Mortgage Rates, at truthaboutmortgagerates.com. Now, what has gone on this week to cause all of this? Well, number one, a real good thing in an overall sense that we've seen oil move lower. Now, it did move back a bit higher yesterday, but in an overall sense, we have continued to see oil prices move lower. So we're going to see that have an effect on inflation. It may take some time for it to play through, but anytime that we've seen oil move lower, it generally has helped stocks because they want to see that, and it's going to help the economy. And we want to see bonds improve, but if we see stocks improve, bonds typically haven't. But overall this week, we've seen now bonds improving, mean rates moving lower, and we had some more disappointing economic news today that really helped us to get past the 25-day moving average today. And the big thing was that initial jobless claims really soared up to 448,000, the highest point that we've seen. And no, the highest point recently that we have seen, started getting up over that 400,000 mark, is a serious mark, looking for a very weak job market. People were thinking that we're going to continue to see somewhere in the 370 to 380,000 mark, and now going to 448 is a huge jump, basically showing there's continued weakness in the job market. Now, that really helped bond market to feel, here, things are slow, inflation is not going to take hold, and the economy is continuing to slow, again, hurting stocks and improving bonds. Now, as we look at going forward here, again, we see we're coming up to a 50-day moving average. We also have a big report tomorrow. The Labor Department issues the report for June and saying how many new jobs were created, or actually how many jobs may have been lost. Now, earlier this week, one of the things that we had that was a bit of a negative for the bond market was the ADP report. It actually looks to do the same exact thing that the Labor Department report does, but typically the numbers have been way off. They use some bit of different information, and the ADP showed that there were an actual job gain this week. Labor Department, everybody on the street is estimating somewhere around a 75,000 job loss. Now, if we see a big difference, whether it be it's better than expected, we're going to see the bond market sell off strongly and probably see stock market improve. But if you see even worse than a 75,000, then you're going to see bonds, I think, definitely improve. We'll break through that 50-day moving average and start our march towards the 200-day moving average, and bond prices moving rates down. So it's a big day tomorrow to see that. It's kind of going to set the tone for the next week and what is going on with the job market. Again, job market is going to be helping to dictate what's going on in the overall economy, so we can get this economy turned around, hopefully helping maybe get the housing prices stabilized also, if we can get a little more strength. So if you want to check out all the news about what all this means, how does it all factor into making rates move up or down, check out the special report, truthaboutmortgagerates.com. At truthaboutmortgagerates.com, click the link. Also, we have our special site that's going to be coming live, askyourmortgagemeltdownquestion.com, or for short, AYMMQ.com. Click on that. You'll be able to get on the pre-notification list when that goes live. It should be live sometime in the next week, and you'll be able to ask your question. Maybe it's a rate question. Maybe it's a question about an adjustable rate, a subprime mortgage. Should you buy? Should you refinance? What should you do? Obviously, we can't answer something in specific situations, but overall questions about what's going on in the mortgage market and how some things may factor into overall situations, please feel free to go to that site, put your name in now, and you'll be notified when we'll be able to answer your questions. Till then, go check out truthaboutmortgagerates.com. This is Wayne from truthaboutmortgagerates.com. See you next time.